Welcome to Friday, everybody. I am the only person in Benzinga HQ right now, but that's okay. The show must start and go on. We got a show today. We've got a jobs number. We are going to talk about GameStop. Obviously, we're going to talk about GameStop. What drove the pop yesterday and then the subsequent drop this morning. We'll talk about that. We'll talk about Humana. Holy cow, Humana yesterday is Exhibit A as to why investing is just so ridiculously hard. We'll talk about that. We'll take questions from our chat. We have Trevor Neal on the show. He hasn't been on for some time, but he is fantastic. He's got a really good way to visualize how the market rotates from different sectors and different stocks. So he'll be on at 8:35. You guys know what to do in the meantime. Hit that like button, hit subscribe, tell your neighbors, wake them up, tell them we're starting our show, and you got to be here. This is PreMarket Prep with Joel Elconin, Dennis Dick, and Spencer Israel. I've got Mr. Joel Elconin here with me. Dennis will be on shortly. Joel, good morning. How are you doing?
Good morning. Happy Friday.
Happy Friday indeed. There's Dennis. Happy Friday, everyone.
All right, let's run down the numbers real quick and then get to some stonks. Spoos down.
Spoos up. We haven't heard stonks in a while.
Joel says that sometimes.
Wasn't that from Portnoy?
No.
Was that who started? Who started stonks? I thought it was Portnoy started that.
It was Reddit.
I think it was Portnoy. I'm saying Portnoy.
Okay, but no. But anyway.
Spoos up 491.5, just kind of nestling in there between the closes from Wednesday and Thursday. IWM flat. Crude up 51 cents, hanging out there right at $80. Gold down 90 cents, 1788.30. Just flat. Silver's flat, 22.14. Slow leak in Bitcoin here. Boy, oh boy, I'm not sure where we're going to find a bottom in Bitcoin. And Ethereum, that's down $181 at 3,236. Jobs Friday. Do we get a hot number? And, oh, my God, we have to start raising rates tomorrow? Or do we kind of get a bad number and maybe we shouldn't be so hawkish? Which way is it going, Triple D?
I don't think anybody
You really
knows.
don't care.
I know, and I don't really care. I just want volatility as a trader. As an investor, you like the stocks going up. But when the stocks go down, my investment portfolio hurts as well. Not as bad as if I had a lot of growthy names, but I mean, here we are, this, situation, the rotation continues. I mean, again, we saw yesterday, actually, towards the afternoon, actually it was a washout on the Cathy names right off the hop.
Yeah.
And then they bottomed late morning and they kind of held on to the gains early afternoon. And now we're at a standstill. So really, they're waiting here right now, trying to decide, well, are we going to like the jobs number? Or are we not going to like the jobs number? Are we going to buy the banks? Are we going to sell the banks? Are we going to like rates? What's going to happen? There's going to be some major movement here in 26 minutes. I'm going to obviously leave a few minutes before that to prep for it, because the one thing I can promise you on this jobs number is we're going to get some chop. And this has been the word of 2022. It's not momentum. It's not jumping in the breakouts. It's been the fade trade, and it has been choppy. And I think that continues for this foreseeable future.
And we did really get a pop yesterday. We did, there's always the chance when you have that big down day, right, that you're going to get the 2-day move, the flush, right? And they did it in the pre-market, and they did it once during the regular session, but it was good. I mean, we didn't have, the 2-day crater. On the other hand, there wasn't that just buy, that one, we just got to get this thing back to 47.50, buy. It was, you could feel people, all right, we got the number coming out tomorrow. I need to be a little bit more conservative. I'm going to square some positions.
Yeah.
And that's the kind of day we had. Did you just cut off Triple D?
No, he cut himself off.
Okay.
By the way, everyone, shout out to Enver for the new graphics today.
Let's see.
Let us know what you think. We got some new fancy schmancy graphics and transitions. This was all Enver, so if you hate it, yell at him. If you like it, you can praise us.
What can you go back to it?
Oh, we're on it. Yeah, we're on it right now. I mean, we can't see it on StreamYard, but it's on YouTube. It's on YouTube right now.
Oh, I got to go to YouTube.
I go to YouTube. So check
Should
out.
we?
Yeah.
Enver is so shy. Can you bring him on just real quickly so people can just see who he is real quick?
I would love to. And Enver.
He's
Come
never
on,
been on
Enver, just
before.
say
Yes,
hi.
He won't do it.
There he is.
Yes,
That's the man
Enver!
behind. That's the man behind the curtain, right there, like the Wizard of Oz. You pull the curtain back, and that's who you got.
We
Yeah.
got you. All right, Enver.
You think it's being run by the trading gods, but it's really being run by Enver. Hi, Enver. Chat, give him some
right.
love.
Everyone give Enver some love in the chat. All right, thanks a lot for these graphics, Enver. Hey, let's talk about GameStop here. This was the after hours news of the day. So the headline, it was all very straightforward from the Wall Street Journal. The headline is says everything, right? GameStop entering NFT and cryptocurrency markets as part of turnaround plan. Now, those of you following the GameStop story, your first reaction was, "Oh, we knew that already, duh," because that in itself was already known, right? This has been in development for months. GameStop had that website, if you recall. There's some hints dropped along the way. A lot of people did know about this. What the article had that maybe was new was just a little bit more details, right? They provided more details about, for example, the number of people that GameStop has hired to help on this front, the number of deals that they're close to signing with cryptocurrency firms. So it just provided more color, but the actual headline itself wasn't really new news. Now, all that being said, let's go see how the stock reacted.
Just rip, roaring, rally to an unbelievable amount. So I had the initial oomph to like 152, 153, and a pause there. And I had this thought process. I'm like, well, this is ridiculous to be up this much on a headline that we already knew, which, because we have talked about, like you said, Spencer, this is not, the first time that it's been mentioned that they're going to get into the NFT market. And I was like, maybe I should short it. And I was like, you know what? Nope, because I don't know how stupid this can get. Anyways, thank goodness, I sat back and did not short it at 152 because then it took off in the next bar up to 175. Put like 4 tops in there, Joel, and then obviously, like you were saying, there was somebody made a stand and said, nope, you're not going higher. I don't know who it was, but, just looking at that chart, I think you're absolutely right. Somebody made a hard stand there. And, it's come off significantly from those highs now. Still trading up 23 points on this. Who knows? This stock can go wherever it wants. It's been disconnected from fundamentals for the better part of a year now. It makes no sense that it was 142, 40, 340, 154.
New low to move yesterday.
It doesn't matter. It's just numbers on this thing because nobody's trading this on fundamentals at all. Completely disconnected. Like I said, I do believe stocks always reconnect eventually. I don't know when this thing's going to reconnect. I pretty much, the only way I'll trade this is if I'm pairing it up or something. I wouldn't be trading the leader. I did trade the laggards on this. So when GameStop started to rip, roar, and rally, I did buy some AMC. I did buy some Bed Bath & Beyond. I did buy a few of those names. I'm already out of all those trades. But there was, there was a lift in some of those meme stock names. AMC was one that probably got the most lift. I think at one point in time it was up $3. So there was a relationship trade off of it. But to just say, oh, GameStop, it's dumb that it's up 20 points and it's going to short it, it's a dangerous stock to do that on. Normally, normal headlines, wasn't GameStop, was up too much on it, I'd take a shot and short into it, but not on GameStop. I'm spooked on that stock. Still spooked a year later.
I know.
A year later.
And when we spoke last night, and after I pulled it up, it was after, they were forming the 175s. That's why I had asked you. I could see at 152, 155, you're scratching your head, maybe a pause, and then you get your face ripped off. But but then it just seems like someone said, okay, enough is enough here, 175. And then, it took a few brackets, to break it. I mean, is it going to go red on the day? I don't know. I'll just look at if you're looking, it probably won't go red in the day because you got the people that are stuck short now are going to have to work their way out of it. But I'll call support at the top of yesterday's range, 137.70. And I don't think you sniffed that pre-market high. That's just what I'm looking. I'd pick an intermediate level in between there. I've been wrong before. But I think the boys got some work to do, get it back up to 175.
And I mean, the reason this goes up and everybody likes to think that the market is manipulated, and it's all just, and to a certain extent, it actually is. It's probably manipulated by headlines more than anything. I mean, even this headline in itself,
Right.
I mean, look,
Old news.
it wasn't a headline. I guess it was an article from the Wall Street Journal, but every buzzword in the article, NFTs and cryptos, make sure you get all those buzzwords in that headline. I mean, it's, the media manipulates stocks more than anything. So I'm not saying there's nothing to this. I'm sure that they're looking into what they can do. It kind of see it as a fit too. I mean, games, NFTs, it kind of fits in. It's not like they're completely going off the charts. When AMC is getting into NFTs, you're like, wow, it's not make as nearly as much sense as a GameStop. So I get it. I get that they're getting into that. Is it worth 17% more today? Well, it wasn't never worth $131. Didn't make sense. So you can't do any fundamental analysis on this and come up and crunch your numbers and come up with a $154 price target. You just can't do it. So it's going to get driven on headlines. If there's another headline after this, maybe it gets driven again. But I think there's market makers that are just spooked to short stuff like this. I'm spooked to short stuff like this. So it's hard to keep the price in check. And that's why this thing has these violent moves, because there isn't that natural liquidity that's keeping the price in check. It's very retail driven. It's very story driven. And just as much as story hasn't mattered in 2022, it still matters to GameStop. It's the only thing that keeps the price elevated is the potential for a story. It's a big headline. So, is it going to drive the rest? We're getting, questions. Is it going to drive the rest of the meme stocks? It did a bit last night. Let's see what it does. If GameStop can start ripping, then some of the other stocks could go again. But it's kind of leaked half of the gains already, 20 points off, up 23. So I would leave it as a leader. If you're trading AMC, you're absolutely watching GameStop action. If GameStop starts to rip, roar, and rally again, AMC could get a bit of lift off of it too. I mean, nice double bottom AMC too, Joel. Just looking at the charts, look at this. Bring up the AMC, perfect double bottom. 2080, the low on December 14th. 2080, the low on January the 6th yesterday. So technically, that looks healthy to me. Not saying I'm coming in buying AMC, as a long-term investment. It'll never touch my long-term investment portfolio. Like I said, I still think the price goes lower in the long run, but short-term, you got a little double bottom.
And it probably, whoever was making the stand at 26 or 175, you don't know if it was someone trained, but man, if you got stuck long that thing and you had the news, it made a new low of the move. You talk about a gift from the trading guy upstairs. Holy mackerel! So.
And I think a lot of people probably coming in and taking that gift, and that's why you see the profit taking on it, or some people just saying, yeah, I've been, really hit hard in this stock, and now I'm getting, half of my money back or a chunk of my money back, and pretty happy to get that back. A lot of people, so it's hard to call this stock from a fundamental basis, but we can just say again, technically speaking, AMC little double bottom, and obviously from GameStop perspective, it did breach its low, made a new low on the move yesterday, but headlines trump technicals every single time. And we've talked about this on the show over the last 7 years lots of times too. Doesn't matter how pretty the chart is or what the chart looks like, you get a headline, then technicals matter afterwards, but there's going to be a repricing. So just because you have a bearish chart, bullish headline, it can break you out of that bearish pattern. Headlines trump all.
And so again, just I'll add a couple things and then we'll put a bow on this. Again, the headline itself was not like quote unquote new news. If anything was new, it was just a couple of details in the article. I did not sleep at all last night, so I was on Reddit like 4 hours ago, and I was just like scrolling through, and I saw a lot of people talking about like, oh, we already knew this, therefore this can't be why the stock is higher. And I wanted to
it's just going up because it's just
caution against that, because just because you know something and you think doesn't mean don't assume that the market always knows all, because we got proven wrong the other day, like with the Fed minutes, right? Like the Fed minutes, like what was in there wasn't really that. It wasn't that new. It was a little bit new, but it wasn't that new, and the market
good point.
Totally reacted. So I was looking through Reddit, and I was looking through the different subreddits. Even if you assume the two, everyone on Reddit is everyone on like the Reddit, the stock subreddits like Wall Street Bets and whatever. Even if you assume they all know everything about GameStop, there's 15 million followers between those two groups, and there's 100 million retail trading accounts in the United States. Okay, so the universe is so much wider than it is just Reddit. Okay, that's the first thing, and the second thing is, if this was a year ago, GameStop probably keeps going this morning, right? But it's not a year ago anymore, right? It's a different kind of market.
There's bag holders everywhere in that thing.
No, but also
That
like
keeps the lid on it.
but also we're just in a different market. You know what I mean? Like growth,
Yeah.
like GameStop is kind of growth. I don't know. It's its own thing, but like it moves with it's a
It
risk on
moves with
thing.
growth names.
Right. And growth is weak. We've talked about this for months.
Yeah.
Right. So like it's a different kind of market. I'm not at all surprised to see it trading off its highs from last night, because that's kind of the way things go here. But
yeah, selling the rip has worked very well. I mean, but
Yeah.
again, on that stock, you could have been selling the rip at 155 and then it's 175.
Yeah,
And you're like,
yeah.
oh my goodness, how do you control the risk on that one? It's tough. Like, you get those 4 tops, maybe you can try it, but it's a difficult stock to trade. But just to your point, don't assume that the market knows everything. I would say the exact opposite. Assume the market knows nothing, because this market has been the most simplistic market that I've ever seen. It prices in nothing. You get a headline that's already out there and they drive the stock up, GameStop 40 points on it. It's so simplistic. I mean, the algos are all simplistic. It's algorithmic driven. And that's probably why this market, there's just not a lot of fundamental people saying, sitting there driving GameStop saying, we already know this. The algos don't care. They see this headline NFT GameStop and they buy the hell out of it. So yeah, there's retail, following the algos, but it's the algos that rip that on that headline. And if we went and looked at the tape, I'm sure in 0 seconds after that Dow Jones article comes out, that they're ripping GameStop up, like you can bring up the chart. I'm sure it went up, in the first minute that, 15, 20 points, like instantly. So it's algorithmic driven. The algorithms just are programmed in. They don't think, they're programmed for what they are. That's where it's very simplistic. 20 years ago, it wasn't like this. There's a lot of, okay, let's analyze, and put on our hats and figure it all out. But in the short run, it's all algorithmic driven.
Very good point. Okay, so let's move away here from that and move on to the big mover of the day yesterday during the session, which was Humana. Joel and I discussed this at length yesterday on the At the Close show. Just an absolutely brutal looking chart. If you somehow missed the news, Humana updated their guidance for the year, and they said that they expect their new membership, their number of new members, to be about half of what they said previously, which is a pretty big cut to their membership guidance. So that's what the catalyst was. That was out yesterday morning. You don't often see stocks like that make a move like that.
That's an incredible move. I can't even believe the move. You look at Humana and you look at the long-term charts, and you've been trading in this range. You were at the top of the range yesterday, and you literally took out a year and a half of gains in one candle, in one day. It makes me not even want to invest in the market when you see stuff like that.
That's what I said to Spencer.
If you start seeing stuff like this happen again and again, it'll spook people out. So, this is what we started seeing happening, especially after the financial crisis, you'd see just stocks all of a sudden boom. Even after the tech bubble burst, I can remember the first one. You remember this one, Joel? It was Lucent Technologies. And it was like just at the beginning, like March 2000. And Lucent fell 55% on an earnings report. 55%. It got cut in half. It was the most widely owned stock at that time because it was an AT&T spinoff. So the most widely owned stock in the US fell 55% on an earnings report. And I was like, is that right? Did it split? Was there something there? No. It just fell 55% one day. And that, spooked people out of the markets for years. Not the Lucent event, but then obviously the cascading after that. You start seeing stocks fall 20, 30% that are staples in people's portfolio. They get turned off of investing. So it's not a good thing for investors overall when you start seeing stuff like this happen. Is it a buying opportunity? I would let the dust settle. But, you have so many bag holders of people that are just gasping. They can't even believe they lost a year and a half gains in one day on a stable stock like Humana. This isn't some technology stock.
No,
this is a
all.
stock that moves $3-4 a day, loses 80 points in one day on, a guidance headline, which, wasn't even, I looked at it, didn't even seem that bad. But the market hits first, asks questions later. They hate lowering guidance. I don't even know what to say. You can bring it to the technicals, Joel, but I think I'll lay off until I see,
there's
not trying to be a hero on this one.
Yeah, I mean, there's no bounce, and people are only 3,500 shares have traded. So I would look at this one and it takes out, 360. I wouldn't try it for long. It takes out 360. That's your number. Look for more downside. What do you got on the monthlies? Boom, it's below 364.67 was a monthly low, but we took that out. There were a pair of monthly lows at 365. So if you want to use the monthly lows on the lean on the 360, but boy oh boy, but I'm not going to have the answer for this, but there's got to be some fundamental reason for this, right? I
Oh
mean,
yeah.
I don't know what it is. I mean, I don't know if
What
it's
was the report?
well, no,
What
no,
do you
no,
mean?
no. I mean, why the Medicare is off
Right.
so
So
much?
maybe they lost like some Medicare like partnership is I think is what Joel's getting at, right?
Yeah,
Yeah.
yeah,
Oh, why the earnings are going to
or
Yeah.
be
the
cut?
number of people older. Well, this is for new enrollees, so I am not a demographic expert, but the baby boomers, they're probably not up there for Medicare yet, right? And then maybe the
Well,
old people
I mean,
are past, are moving on, and the baby boomers are not quite eligible enough for Medicare. I don't know. I'd have to talk to someone that knows a little bit more about this than me, but
a really interesting question here from Martin, right? And he's at so, and I'll pose it to either of you, and I think you both can answer it well. Is like in terms of market dynamics, what happens in Humana yesterday morning to make it go down from what was the close 460 on Wednesday or Wednesday to 420, just huge gap like that, right? How does that work in terms of just the market dynamics?
No, well, so you can say from a market making perspective, you see something open down like that, market makers for the most part back the hell off until you get some stabilization. And then you get some stabilization. But what can happen is more interesting when you see that free fall after it broke 400 down to 360. You see how it goes down a straight line like that. So you do have market makers like Citadel, Virtue, are going to be constantly making markets and everything. And the way they make money is by flipping. So, they do very well, and a little choppy. They can do well in a trending market as long as you got a little bit of chop to you. When you go in a straight down market like that, sometimes you can get a situation where the market makers almost get too full, meaning that, okay, we got too much of this stock, so we're just going to back off providing liquidity, and then it opens it up more and more. And that can happen. And I'm not saying necessarily it's Citadel or Virtue did, but there's lots of different market makers, electronic market making firms that don't have affirmative obligations. They get too much of a stock. Even myself, if I get too much of a stock, I'm going to stop buying that stock. So it's the same thing. You get too heavy in one stock. So if it's going straight down, market makers can get too full, and then it can really start going down because then you start losing more liquidity, and then you have people, panicking, and it just, that's how little mini crashes happen, and that's basically what Humana was yesterday in that stock. It was a crash. It was a crash in that one stock on the headline. And we see this every day. But it's the fact that market makers don't have the affirmative obligations that they used to. Not that they would always follow those affirmative obligations, but it's a different dynamic now. They get too full, they back the hell off.
yeah, no
And
bids. We're not bidding this.
But Joel, in terms of just buyers and sellers, though, can you maybe explain
What I think happened was, and you just get a crescendo of stops in here. Now
Yeah.
I don't know how many people use stops to protect profits or whatever, but boom! I mean, off the open, you had everything between like 455 and 420 executed, right? So those are market orders, and then I mean, in a stock like Humana, let's say 420 starts going down. If there's a 10,000, and I this is just hypothetically thinking, if there's a 10,000 share sell stop at 410, I mean, you're gonna, and there's no stop limit on it, you're gonna knock out a lot of levels. I mean, that's a $400 stock, 100 up. I mean, I someone in the group yesterday, and I'd be interested to know. He had a UNH sell stop in, and I just wonder what kind of slippage you got it. But
there won't be that much slippage. I mean,
really,
no, there's even on something like this, it's still fairly smooth. So you might have slippage of like 20, 30 cents. You're not going to see slippage of like $2 on something like this. And
you
a
don't think
flash
so?
crash, you can no. No, there's not even a spike. Do you see a $2 move on that? Do you see any $2 movement on any smaller candle? No. So on Humana, I'm sure it was trading probably a buck wide, so it's possible you could get a $2, but you're probably getting 50 cents a buck worth of slippage on that. I traded it. You know, you gotta move in for like 50 cents. You know, like
Okay.
even right now in the pre-market's 90 cents wide. So it's just the fact that stocks, when they get the bad news in this market, this is the type of market that people back the hell up and wait for. It's so momentum driven. So when you start seeing that happen, all the momentum traders back off. The value traders are slow and stodgy, so maybe they're going to come in and eventually give it some support, but they probably don't even realize. Half the value traders don't even realize it till they see the newspaper the next day. Seriously, like taking it back. Like they're slower traders.
I don't know if that's true anymore.
No, well, they're slower traders. It's an exaggeration. I mean, okay, the headline on your Benzinga Pro, but I mean, there's not like value traders that are sitting there actively trading. They're slower. They're like, so now they're analyzing. The value guy is looking, is like, okay, what do the fundamentals make sense? They take their time with their decisions. That's why they're very, good fun. That's why good fundamental investors like Warren Buffett, do well over time because they really do their homework. Where traders are just, going off of their momentum and going off of, technicals. They're going off of a lot of different things.
Sure. And also, like, what about the advisor managing, $10 billion for, 100 wealthy families? He's not going to make any rash decisions like that, right?
Exactly.
Right. So
the volume went from 700,000 on Wednesday to 7 million yesterday.
That's
and I was
crazy.
looking on that.
Wow.
So what also, what you see there, and another reason for that kind of decline is, I don't know how much of an institutional holding that is, but there could be an institution that is loaded up loaded up at 300 or 310, 320.
They take a while to get out.
And they're like, this is, let's get rid of half of this, or let's get rid of some of it. And they're still selling at a profit, not nearly at the kind of profit that they had earlier in the week. But there's a couple market dynamics for you.
We're going to get the jobs report here. I'm going to
Okay.
go prepare for a few minutes. I will probably be back at you in 7 or 8 minutes just because there's going to be a lot of chop here. I think you're going to see 5 fake outs before I even come back.
Okay.
So.
That'll be you faking everybody out.
No, Dennis read my mind.
I'll be getting faked out, Joe.
I was about to trip. Whoa, the voice of Dennis there.
Ooh, in the background.
The disembodied voice. But no, that was a great discussion. And if you were, if you hadn't seen it by now, I mean, all of Humana's peers, right? UNH, Cigna, Centene, CNC, right? Ticker CI, ticker ANTM, all moved off that headline yesterday. But anyway, it is 8:28 now. We are T-minus 2 minutes until the jobs number. Here is what to expect. It's expected to be a hot number, and by hot I mean just like bigger month over month. The expectation is for 447,000 non-farm jobs being added last month versus November was 210,000. That was a lot lower. That was a lot lower. So and if you pull up a chart, actually, you know what? I'll do this right now. Let me just pull up a chart of the non-farm payrolls monthly figure going back, I don't know, a year or so, and we could just get a feel for like just the speaking of chop, just the choppiness of this data point here. You can see it's up, it's down, it's up, it's down every few months. So anyway, 447 is one key number. 4.1% is your other key number. That's your expectation for your unemployment rate, 4.1%, which would be down from 4.2% in November. If you recall, all the way back in the before times, before COVID, unemployment was down in the 3.6% range. So that's where we're at. We'll bring up the futures charts here, and we'll just let this thing rip. How we doing, Joel, out there? Ahead of it.
Just focusing in here. We're steady. We're up a couple handles here. 2 closes. The lowest close of the last 10 days, that was yesterday at 87.50. Pre-market high 05.75. If you could clear the pre-market high, you got about $10 up to Thursday's high at 15.75. So there's a 10-point pocket. Now, if you take out the pre-market low at 78.65, you got air down to 62. But I don't know. I think the pop over 05.75, that quick 10-point pop, will be a little bit easier than getting it down to yesterday's low. But here we go. Headline number, jobs report imminent. They like it so far.
Yep.
We're popping. 40.
So again, yeah, go ahead. No, I was going to say, so here's the routine, right? We look at the overall indexes. We look at the TLT. We look at the banks. We look at tech. That's where our eyes go right now.
Ooh, someone jumped. Did someone jump the gun there? When we got up to 4,700? I'm not seeing anything yet.
Yeah, I'm also not even seeing anything. What the heck?
There it is.
Oh, there we go. Okay. Whoa. Okay. What? Oh man, this number, it is a hard number to narrow down. Holy cow, that's a big miss. 199,000
Ooh,
jobs added last month. Remember, the estimate was at 447, and we got 199. Remember what the ADP number was yesterday? That was a huge beat. It was like a 40 or 50% or maybe more. It's 100% beat the ADP number. That appears to have not have transferred over to the non-farm payroll figure. So 199,000 jobs added last month versus a 210,000 job estimate. It might not seem like a lot, but that is a pretty notable miss there on the headline number. Wow.
they tried. They tried to pop it. Made a what got up to it, the 40, just over 4,700 there. Sellers coming in, kind of where we were before we started the numbers. So you didn't get that pop. So we're thinking weak number, weak economy. You're thinking maybe rates aren't not going to go down, or rates are not going to go up as much. But I think the reading here is that it's a bad number, and that's
I,
not good.
I,
It's
I don't
not
know,
good.
because on the other hand, the unemployment came in below estimates.
Yeah.
We are now back down below 4% unemployment. Now, if you have a bone to pick, if you want to, criticize the numbers and the methodology and the survey, I think that's all fair game. But the numbers are what they are, and the market cares very much what they say. So 3.9% unemployment for I'm sorry, 199,000 jobs added. So just a big miss. 199 versus 447. 210 was the prior. It's just a big miss. A big
Big
miss. Anyway,
miss. And
watching the market here, TLT dipping, banks dropping off that.
yep,
Tech choppiness. Tech chop. That's what we're seeing.
yep. Let me go to the pre-market trading here. TLT. There wasn't much going on. Let's take a look at J.P. Morgan. Let's tighten up the time frame. Big run in J.P. Morgan, and this is not. They wanted a hot number for J.P. Morgan. Also, you have earnings coming out next week, so this is not boding well for the banks. Big number for you J.P. Morgan traders. Keep an eye. You got a big gap area, three lows in the same area. Let's just call it 164. We haven't got near that yet. Bank America, I know, has had a really strong move. That's down 18 cents. Just sellers lined up here at 48 over the last two sessions and still hanging up there. So the bank's not moving much off it. What are we looking at?
Here's a thought I just had, right? The Fed has already signaled that they're less concerned with full employment than they are about inflation. Okay. So if the Fed has said that, then in theory, this number should be not as big a deal as CPI. So maybe that's why we're seeing some relatively muted moves here right now. I mean, we're seeing moves, no doubt, but it's nothing insane is happening out there. So I think maybe I should have thought of that before, frankly. But I think that is what could be happening here. Is this number is probably good news if you are looking for a job, because it means that there is still jobs not being filled. Not great if you're waiting on full employment. But yeah, I don't know. That's just a thought I just had. I think maybe the Fed has already said CPI inflation is very
Yeah.
important for them. So I think that probably is more relevant here than the actual.
Now this is weird. I mean, the spoos are selling off, but I'm looking at the stocks, and people don't know what the hell to do with the stocks.
Yeah,
I mean, they're I mean, I'm barely in the top components too. I mean, Apple. Uh, this can't be right. I wonder if there's something. I mean, huh,
I don't know what to do with the stocks. Like you're saying, it's all chop. It's like
what?
I joked I'm gonna get 5 fake outs. It's all just fake outs. It's all just the whole first like 3 minutes here is just fake outs. Like we're just da. So you're just sitting in stocks or just sitting back. Like
Yeah.
normally, like if you see the market get hit, you're whacking stocks. You see the market rip, you're buying stocks. But you're like, is it ripping or are we dipping? It hasn't made up its mind. We're sitting here flat on everything. So the banks don't know what to do. SPY doesn't know what to do. QQQ doesn't know what to do. It's all kind of moving together. A lot of times you'll see banks go one direction, the tech stocks go the other, but they haven't made up their mind.
Well, Dennis,
So,
I don't know if you heard my theory. Is this if the Fed has already signaled that hey, inflation is enemy number one, full employment maybe less important, then if the market were to follow that guidance, then this number is not as important as like CPI, right, or PPI, whatever. Like maybe it's just maybe the market is just less focused on this right now. I don't know. Just a thought.
I know nothing, but
I
they're
don't know
trying to
anything
dip
either.
them now a little bit here, but it's a lot of chop.
Yeah,
A lot of chop.
much will be made of this number. Again, it is ridiculously hard to predict, but we have to go off something. So that estimate of 447 actual was well below that number.
New pre-market low, Dennis. Things
Yeah.
might be moving now.
Yeah, they're starting to figure it out. They don't like
Yeah,
it.
it was weird because I see the spoons moving. I'm looking.
Well,
I
I was just sitting there too. I'm waiting for give me an indication. Like, are you hitting them or what are we doing here? Like, give me a tell. So now you're starting to get hit here a little bit. I guess this market couldn't figure it out, so like might as well just sell them because that's what's been working.
Well, yeah, now we're going.
Yeah. What's oil doing? Just hanging up. Didn't really
still up
move.
77 cents. Gold not doing much. New pre-market low.
Gold,
75.5.
Figure.
Gold's leaking here. Joel.
Yeah, gold's.
I mean, when I say leak is a strong word. Anyway, let's bring on today's guest. This is going to be a fun one here. Trevor Neal is the founder of RRG Research. He's also a director at the Beta Group, and he's got a really cool tool in how he visualizes the market. His charts are awesome if you subscribe to the idea that money never leaves, it only rotates, it just moves around in a circle. So let's get Trevor Neal on the show right now, all the way from across the pond. Trevor, good afternoon, sir.
Yes, good afternoon. Hi, Spencer. Hi, guys.
How's your Friday going?
Very good, very good. It's a bit later in the day here, so closer to the middle time.
I would love, Trevor, just to start off with, just to get your thoughts, high level, like what you're seeing out there in terms of the rotation. And then I would love if you could share your charts at some point, just by hitting that little share button on the middle there. And we can
I've been listening to you guys talking and digesting the numbers there. And, basically, I would say, if I may say, nothing really happened, and so nothing changes, okay. And so the existing trends are intact. And from a institutional point of view, from a big picture point of view, and from a fund management point of view, there was nothing there that would alter any positions that people had, which are essentially bullish, particularly in the US stock market. And so I think it's onwards, and we haven't had a blip even in this with this data here.
Maybe you're right. Maybe it's all just noise. That it very well could be the case. But at a high level here, Trevor, what are you seeing from the different indexes?
Yes.
I would just love to get your overall thoughts here, because the way you look at things and the way you visualize rotation, I think is very interesting.
Okay, thank you. Now we got a bit of an echo.
Did you try share? Oh, no, it's gone. That's weird.
Yeah, that is weird.
Okay.
No, it's here.
Let's try something on my end. Let's try that.
Okay, I'm starting to share the screen. That's why.
Okay.
Okay.
Nice. Okay. Yes, I see that. Excellent.
Okay, brilliant. But we still got an echo.
Yeah, you know why? It's because when you shared your screen, you're also sharing your computer audio. But I think we can roll with it, Trevor.
Okay. All right. Okay, let's start with this first relative rotation graph here. As you can see, it's a scattergram with a quadrant. In the middle is the MSCI world. So if you like, this is the world. And this is just to show you something you already know, that the S&P is the best asset to be in the world, compared to bonds, even compared to the Dow, compared to emerging markets, compared to European markets. By far, the S&P is the best security sector to be in. But I want to drill down from that into eventually, in a few minutes,
Wait,
into
Trevor,
an actual stock.
Trevor, hold on real fast. Do you have YouTube open right now? If you do, can you close it? That may be what's causing the echo here.
Switching off. I was listening to you on YouTube before, but I had
Whoop.
sound down. No, that's not.
Let's get rid of that there. All right.
Is that it? Better? No, it's not. What is going on? Let's just stop sharing for a second, see if it was to do with that.
Are you okay?
Yeah, is that better? No, it's not.
No, it's not. Okay, so it's something to do. You're playing us somewhere. I'm not sure where you're playing us, but I can still hear you. So I think we can just keep rolling back with the charts. And I understand that the charts are a little bit hard to see. So Trevor, just be diligent in describing,
explaining them.
Yeah,
okay. Let me. Sorry, let me just try. If I mute now.
Right. Can't hear you.
Okay, you can't hear me.
Right.
And then I just.
Yep. Sorry, guys. All right. Hopefully that.
Can you hear me now?
Yep. I hear you the same way.
Okay, with echo. Okay. Shall we carry on?
Yeah, I'd say let's keep powering through this. Let's get your charts back on it if this on the screen if we can.
Yeah. Okay, so you can't see the graphs. Let's do that.
And all right, bottom line from what you were saying before is the S&P 500 remains the quote unquote, and it's all relative, but the quote unquote safest place for your money right now.
Yeah, and I really want to show you the graph. Just bear with me a second.
No worries, all good. We're bearing with you. It's a Friday.
That's very good of you to do that.
It's a Friday, Trevor. What else are we gonna do? I'm just trying to kill time until 4 o'clock. All right.
Okay. I hope you keep through the time.
Yeah. It's just trying to. I mean, you're a lot closer to 4 o'clock than I am.
Yes.
Oh, sorry about that, everyone.
I'll try and talk quietly, I guess. I don't know what it's picking up.
Here we go. Okay, so back to the charts, though.
Yeah. Okay. So let me move on. Let's look at the S&P, and this would be a normal way for people to look at the sectors of the S&P, starting from the performance of the beginning of last year to currently seeing that the energy sector has been top, and we go through the sort of vertical column of what is strongest, but really how to really take the messages from that and understand what's really going on and where the opportunities lie. This is not the right way to look at it. The right way to look at it is to use a relative rotation graph. So let me just explain a little bit what it is. As you realize, these are the sectors, the sector ETF fund sectors, and in the middle we have the S&P itself. So it is a dynamic scattergram. The top right-hand quadrant, which I call the leading quadrant, everything on the right of 100 is outperforming the S&P. So, for example, we've got the consumer discretionary, we've got energy, all these things which are on the right, and the furthest to the right means they're strongest. The weakest sector is the communication services currently.
So my favorite part is when you show us how it moves, though.
Yes. Well, the way we can see it move is through sampling in the past. And I haven't got set up for you, Spencer, the actual lovely GIFs that I did show you last time. I'm really sorry about that. If I'd known, I would have done it.
That's okay.
But here is the journey it's taking. This is last week, the week before, the week before, the week before. And that gives us the direction. As you say, it very visually shows the rotation. We talk about rotation in the market, sector rotation. Well, this is it. This is what it looks like. And the rotation is clockwise. And so by displaying in this way, we can visualize the rotation and see the opportunities. just to explain on the vertical axis, so on the going right hand side of 100 and left hand side of 100 is outperforming and underperforming, but in the vertical axis it's the positive momentum of the outperformance. So something which is heading, for example, northeast, so 0 to 90 in the direction, so heading both right and higher, means it's getting stronger with positive momentum. Here we've got in the communication services, we've got something which is weak, but is slightly improving in its positive momentum. So if you think of a list of anything, it could be as it is in this case, the sectors, but it could be stock markets of the world versus the MSCI World Index. It could be the consumer durables sector and all the stocks that are in it. Any list like that, you've got a column, strongest to weakest, but they move inside the column. And really the opportunities are to be made from joining things which are moving up the column and speeding up the column. Not buying the things at the top, because they're the things which are already the strongest, and really you've lost the opportunity there. So that's the purpose.
Yeah, so the idea is, if you think of it like a clock, the idea is you want things moving from 6 o'clock to 12 o'clock, or 6 o'clock to 3 o'clock.
Yes. Actually, I would rather go from 3 o'clock to 12 o'clock, because that is the sector which these are the things which are underperforming. Say, for example, the consumer staples here are underperforming, so they're not yet crossed this vertical axis here at 100, but the direction is northerly, and so it's got upside momentum. So it's going up the list. It's below the benchmark, but it's moving up fast.
Okay, and just to be absolutely clear, we're looking at the ones that you prefer. You just said 3 to 12 was what is that you just said?
Yes, or 12 to 9 to 12,
9 to 12, 9 to 12, right?
Or 12 to 3.
Right. So 9 to 12 or 9 to 3. That's consumer staples.
Yeah,
right.
Exactly.
That's the XLP, and I'm trying to. That's the bank. So that's the XLF. And it's a little small here, so it's also
down here. I'm sorry, this is XLF, this is XLB, which of course is materials. I'm sorry, it's small.
Yeah, I'm just trying to zoom in there. So it's materials, it's utilities.
Yes.
So
in fact, the defensive sectors,
right.
Actually, surprisingly, and given this stage of the market, but that's the reality. That's what is moving out most strongly.
Got it. All right, very interesting takeaways here, and then the exact opposite for the other sectors, basically.
Yes,
right?
Exactly. So even here, you've got consumer discretionary, which is over on the right, but the direction is not good. So which quadrant is the one you want from 9 to 12 or 12 to 3 depends on really your attitude to risk. Anything which is here is already leading.
Sure.
And you're joining things which are leading. And this one here is early stages. That's the materials, is early stages. But if you're more aggressive, then you want to participate in the things which are not yet leading, which are actually coming up the list, which are going to be the next big thing.
Right.
Where do you think it's going to be?
It's a question of how early are you willing to be, right?
Yes.
Right. How soon do you want to hop on the train? Do you do this sort of thing for individual names or just the sectors?
I do it for individual names. In fact, I'd like to do that now. Let's if you're okay with that.
Yes, please.
Yeah. So let's go to the staples. So I'm going to take this now, and I'm going to put it in the middle, and then plot the stocks in the sector itself. So here is the RRG. Now in the middle, we've got the index, and then we've got the individual stocks. Now, bear in mind the interpretation of this is that you want to see things which are heading northeast, north to 90 degrees, if you like. Further away from the crosshair is best, because anything which is close to the crosshair is correlating with the index, so you can't get outperformance. You need things which are away from it. And also if you look at the samples here, these are weekly samples. This is last week, the week before, the week before, and the week before. This gap is widening, and this means that it's going faster. So this stock is actually strong and getting stronger.
What stock is that?
Faster. Okay, the stock is TAP, which is Molson. So let's have a look at Molson. Here it is. Here it is. Now this is look at this chart. So now we're looking at on an absolute basis. This is Molson as a ratio of the sector. It's turned up here, so you can see the strengthening that's going on here. But just looking at this as an absolute chartist, I would say low, lower low, lower low, lower low, higher low, neckline. Do you think? Shoulder, head, shoulder, and we're breaking up through the neckline of that. And so going from the very top of the world, if you like, we see the US stock market is strongest. We see that the staples are the most promising sector of the S&P, and then we go down and we can look at individual stocks and pick one in the position that we like. And I like this one because it's whizzing through here, and that's Molson. Another one you might Cisco here is it's moving strongly to the right, but it isn't rising. So whether you prefer this one or this one, this is strong and getting stronger, but the momentum isn't there. But it's still probably a good chart. Here we go. And there it is, the chart of it, looking good. But I would say of the two charts, going down to the sort of absolute level of individual securities, and the Molson, not Monster, but Molson is a better looking chart, as a new buy opportunity, breaking up from the neckline of the head and shoulders, I
Awesome.
suggest.
I mean, I'm a very visual person, so I'm a very big fan as to how that information is displayed visually. Everyone is different, to each their own. Everyone's got preferences, but I'm a big fan of that, just that clockwise visualization of again. We don't need that to see what's outperforming and underperforming, but it's harder to visualize how that outperformance changes over time. Right. And
Yes.
I like that, those kinds of charts. So Trevor Neal, again, RRG Research, also an analyst at the Beta Group. Trevor, thank you for joining us late on a Friday for you. Have a great weekend, and we'd love to get you back on.
Yeah, thank you very much, Spencer. Thank you very much indeed, everybody. I apologize for the sound. I don't know what's going on there.
Next time with a better audio, but all good, Trevor. It is 8:52. Dennis is dug out from under his doldrums. We did stop going down, Dennis, for the moment.
Yeah, we did. They hammered tech. They bought banks. So that's what the dust is settled now. We couldn't figure it out at 8:33. They haven't decided what they wanted to do, and then they decided they're going to hammer tech, buy banks. Now that trade's come back in a little bit of really look at what the Qs just did, Joel. They really hit them down hard, and then they bounced them, and now they're starting to hit them again. Again, the only thing we could promise you was chop. Well, you are getting chop. So I don't know where we're ending up an hour from now. Nobody knows in this market. This market's especially hard to predict, the next minute, let alone the next hour. But right now they are hitting tech fairly hard this morning, and they are buying banks. So there is separation, and they're going right back. I think that's what sits there for 2 minutes, doesn't know what to do. Let's go back to what works. Buying value and selling growth. And I think that's what the market did. I mean, you look at ARKK getting ahead here again. Obviously, the Q is getting ahead here. So market going with what works. They're hitting tech and they're buying banks. I don't know if that continues or if it reverses itself after the open, but as of right now, that's what we're looking at.
It was almost like people wanted to sell a rip, and there wasn't a rip. I mean, there was a little bit of a pop, but unless you were out there within the first minute, and then they're like, okay, let's rip. So, oh no, we're not ripping. And then you gotta, then you started selling a little bit on weakness. So we made a pre-market low at 46.70. That stands right now. Yesterday's low, the low of the decline's been 46.62. And that's your area. If you've been leaning on the low of the move, that's where it is. Sure looks like that's going to be tested today, maybe even before the open.
It's a tricky market to trade right now, so lots of chop.
Yeah, we got 5 minutes left, so let's do this. We'll do some ticker time. Drop your tickers for us in the chat. I saw some people off the top of the show were asking about Ford. Yes, we have broken. Oh no, well we're not that, but we did break above $25 earlier in the morning. There was a couple people talking about this stock at the top of the hour. I don't know what there's to say about that.
Their line, I mean, 25. It's traded up in the pre-market, got over 25. Boy, I tell you, it hasn't been a 25 in 100 years. So, it had a couple days where I think it got up to 496 yesterday. Even when the market was selling off, Ford was refusing to sell off. So 495. 495, 25, did get over there in the pre-market. You clear that, then 25 and a half. But boy, oh boy, can you see the book there at 25, Dennis, or not?
Well, did it trade through 25? Has it been through 25 yet?
Yeah, it has.
Yeah, if it's been through 25, there won't be anything. Oh, no, not in the regular session.
Yeah. I'm sorry.
No, if it has in the regular session, let's go check it. So I'm going to bring I guarantee you there's going to be some size there because when it doesn't go through it, there's a reason for that. Let's go look for 25. 446,000 shares, so somewhat significant. Yeah, that's big. That's a lot of money. So it's not a million shares, 500,000 shares there. So that's some stock.
That's substantial size. What about DraftKings here? PSA
finally showed life yesterday, and it's trying to show life here this morning.
Yeah.
So, you're torn. A lot of these, ARC names we could say we can throw it in there. She's been buying it nonstop. A lot of these stocks did show life after the open yesterday. So they got hit off the open. They washed out in the first half hour, and then they started buying them all day yesterday. They're getting hit here again. Who knows when this ends, though? I mean, is it oversold? It's absolutely oversold. Is there, it's got good value here? Probably not. I never crunched the numbers, but probably still nosebleeds. So it's tough. Like, you could get a bounce. I would say I liked the action yesterday in DraftKings, but now you're 250 off those lows. So if you could back and fill a little bit and give me a shot closer to those lows, I don't want to risk 10% because right now you're 10% off yesterday's lows. It's a pretty good bounce already.
We do have sports betting in New York starting this weekend. FYI, largest market for that.
I did buy 2 stocks yesterday in the long term.
Wait. Joel was going to open his mouth, and I interrupted him. Sorry.
Go.
Just for like this DraftKings, I mean, if it can get green, 25.80 close and stay green, I mean, you'd have to risk down to the low of the move, but that's what I'd be looking at on the dailies here. Can it? I mean, 20 is still a ways away from yesterday's high at 26.47. When you've had 3 lower highs in a row. So if it holds green, maybe see if it tests 26.47. If not, I look for it to roll over.
All right, well, Dennis, what'd you buy?
Well, we talked about them yesterday, the Chinese stocks, and I was like, I was looking, I was like, I kind of want to own Baba and Baidu. I was like, I kind of want to own them. Did not buy the Baba. It didn't pull in enough. It was up, but then you had Baidu and JD that both pulled right back down. So they opened, they ran, and then they had this sell-off from like 10:45 to like 11:15. I was like, okay, now's the time to strike if I was ever going to strike. So I threw a little bit at Baidu in my long-term portfolio and a little bit of JD in my long-term portfolio.
I can't believe we've come to this.
I know. I bought, and look, I actually got the market timing right on this one. I bought Baidu. I think you can see if you look at that opening bar, it ran from like 145 up to like 149. When it pulled back to where it was the previous day, that's when I struck. So I think I got it 145. Obviously 152 this morning, so it's working so far. JD, I got right on the pullback too, right around $64. I got it right on that opening morning pullback around 10:15, and then it ran to 68. I'm holding these. I stuck them in the long-term portfolio, so. Just getting a little more exposure. I got a ton of cash in there, so I wanted to get a little bit of an exposure there. I was like, I don't know. Maybe I'm going to regret that. Maybe I'm going to get China on these stocks, but dipping my toe in the water. We'll just say that. I didn't go all in. I just dipped my toe in JD and Baidu.
Nice sell-offs, yeah. And I like the Spencer theory about the Olympics coming up and, perhaps playing nice for a couple weeks through the Olympics. So maybe you won't see any negative. Or actually, Chris Patterson, I think you said in the chat.
Christian Gallagher. That was your
Christian
idea.
Gallagher. Okay, Christian.
If this works out, it was Christian's idea.
It was Chris. Yeah, Chris. Kudos to
who it was. So if I make money, thanks, Christian. If I don't make money, it's your fault, Christian.
That's how it goes.
Kidding. Just kidding.
So it goes. All right, it is 8:59. Let's wrap up the show here. We have more stocks to discuss, not to worry. But Joel, I will catch you later.
Yes, sure.
3:30 for the At the Close show. Dennis, have a great rest of your day. I'm going to end this show now. We're going to go over to live trading with Benzinga. Myself, Dennis is still here. That's what you can hang with
I'm
me.
leaving.
Okay, you can hang.
Sorry, I'm going.
You can
Bye.
hang. You want to hang?
I'd like
man?
to, but it's too crazy.
Okay, fine. Then don't hang. Yeah, so whatever. Myself, Ryan, Mitch, Zunaid, trading. We're going until 10 p.m. to 10 a.m. today. We're only going for an hour because starting at 10 a.m. we have a company-wide meeting. We do this every single quarter. It's all hands on deck. It's a quarter in review. It's a preview for what's to come. So no live shows today from 10 until at the close at 3:30. But for the next hour, the four of us will be in there trading with you. So this stream will end and redirect straight to that show. So you don't even have to do anything. Go ahead in the meantime and hit that like button for us. We'd appreciate that. Thanks to Trevor Neal for joining us on the show today. Thanks to all of you in the chat for hanging out and dropping your comments, good, bad, and otherwise. Please remember all the information from our show is meant to be used as informational purposes only, not for investment or trading advice. No, Miss Whitehouse, the company-wide meeting will not be streamed. I asked, but no. This is the answer. So that's that. All right, I'm gonna hop off here. See you guys over on our next show. Let's go make some money today.